The direct method requires the presentation of major categories of cash receipts and payments. The operating activities for the direct method are going to look very different than the operating activities of the indirect method, but we're going to end up with the same net result. All right, here is our example with Hector Incorporated. This is the direct cash flow statement, and we're going to use the income statement and the balance sheet to show you where these numbers came from. Our first category in the operating activities is cash collected from clients and customers. I'm going to show you where that number is being pulled from. First, we're going to go to the income statement, and we're going to pull the sales number. Now, the income statement is on an accrual basis, so sales is not where I end from a cash flow standpoint when I'm trying to determine how much I've collected from my clients. So I got to go to the net impact of accounts receivable. I'm going to factor that into cash collected from clients and customers. And I have one other area that I need to factor, which is unearned revenue. These both impact cash, because accounts receivable is an accrual basis, so that I want to factor in the net change in accounts receivable, and I also want to factor in the net change of unearned revenue, where I'm getting money before I've actually earned that revenue. My next item here is interest and dividends received. This is going to be a little bit easier. In this example, I do not have any accruals. There's no accrued interest or accrued dividends. We're going to take that number at face value from the income statement. That's where we're going to get that cash flow number. Our next category is other operating cash receipts, the catch-all for anything that's outside of cash collected from customers and interest and dividends. This is mainly going to be realized gains on the income statement. So we're going to grab that number, gain on sale of investment, and we're going to grab that straight from the income statement. That's going to be cash that we received from a gain from a trading security that we sold. But we also want to factor in the impact of trading securities. So we're going to take that from the balance sheet. And the last piece we're going to grab is unrealized gains from trading securities, because they impacted the balance sheet change for trading securities. So I want to make sure I factor in that as well, so I have the full cash impact from that sale that took place in 2025. So those are my cash inflows. Now I want to factor in my cash outflows. This is going to be the operating expenses and changes in inventory related to cost of goods sold. So let's flip over to the income statement, and I'm going to grab cost of goods sold from the income statement. And then I'm also going to grab operating expenses, which is going to be your salaries, your office expenses, et cetera, any operating expenses related to running the business. So we're going to factor those two items into cash flow. And then since cost of goods sold is a byproduct of inventory, we're going to factor in inventory into our calculation as well to make sure we're factoring the full cash flow impact of buying inventory, and then also the cost of goods sold related to selling that inventory. Since this is GAAP-based accounting and we have accruals for expenses, we also need to factor that into operating expenses to get our full cash flow number. We're not looking at it from the income statement standpoint of how much we incurred of an expense in a given year. We want to know how much cash we spent in that given year, which means we need to factor in the change in our accruals year over year to get our full cash flow impact of operating expenses. Our next cash item is interest paid. And we're making the assumption there's been no interest accrued. This has all been paid in the same year. So I'm just going to grab it from the income statement. That's going to be my cash outflows related to interest. And our last item in operating is going to be income taxes. And we're making the same assumption here. No income taxes have been accrued. And I'm just going to grab that number straight from the income statement. I actually paid all those taxes in 2025. If you've gotten any value out of this video so far, please smash that like button and consider subscribing. All right, let's continue with the direct method. All right, let's move on to the investing section of the cash flow statement. And just as a helpful reminder, the investing and financing sections between the indirect and direct are identical. The only difference is the operating section. First category is proceeds from a held to maturity investment that matured, and I got some cash related to that investment. In this situation, it's $75,000. There's no gain or loss related to this particular transaction, so I'm just going to grab the change in value of held to maturity investments on the balance sheet. Now, our next section is going to be cash outlaid for property, plant, and equipment, or CapEx. Now, this isn't the easiest number to figure out, but we're going to get it from the balance sheet and the income statement. In practice, in real life, you're probably going to have a spreadsheet of all your cash outlays related to CapEx, but we can get it from the income statement and the balance sheet. So we're going to grab depreciation and amortization from the income statement, and then we're going to flip over to the balance sheet, and we're going to grab our net impact of intangible assets and fixed assets and add up all those pieces together. That'll give us our capital expenditures, how much cash we outlaid for additional property, plant, and equipment in 2025. Now we're going to move on to the financing section of the cash flow statement, and we're going to grab all this information from the balance sheet. So our first category, dividends payable, we're going to go to the equity section of our balance sheet, and we're going to pull dividends. Now, not every balance sheet is going to have dividends that have been declared. Sometimes they're going to be closed against retained earnings. This balance sheet, I have the dividends still out there, so I can easily grab them. Our second category is going to be the purchase of common stock. I'm also going to go to the balance sheet where I can show the treasury stock that has been purchased in the equity section, and I'm going to grab that number because we bought back those shares. That was a use of cash to buy back shares of this company, of Hector Incorporated. And our next category is going to be debt financing. How much money do we pay back on the debt that we have taken out? And I'm going to go straight to the balance sheet again. I'm going to grab the difference between my long-term debt items that I have here, and that's going to represent principal payments that I've made on my long-term debt. And the last piece is the shareholder loan. When I redeemed those shares, I actually issued a note. So I want to counteract the redemption of those shares with the note that I've issued. So I've redeemed 200, but then I've also issued a $200,000 note. So the net effect of that redemption is zero cash flow. I just have it in two different sections here. Now I'm going to factor in all three pieces: operating, investing, and financing. And that is going to be my net cash impact. How much cash did I generate, or how much cash did I net use within this year? Now, I have generated $300,000 of net cash from these three categories. So I'm going to add that to my beginning cash balance to get my ending cash balance that is on the balance sheet. And you'll see my ending cash flow on the cash flow statement. This ending balance will agree to the balance sheet, the ending cash on the balance sheet.